welcome to the Amber Data Derivatives Podcast. I'm here with Michael Dunn, who is the president of Bitnomial Exchange. Michael, how are you?
Hey, good. How are you, Greg?
Doing good. So we caught up a little bit before the podcast. Very exciting. We're both Chicago guys. You're at Allston Trading. We have a few friends in common, so very cool to chat about that, but we've never met before. So maybe if you'd like to just give a brief background about yourself, trading career, how you got to get into the markets, and what did you do at Allston?
Yeah, and so unsurprisingly, I got into the trading business right out of school. I was a computer science major into software development, and a lot of the Chicago trading firms kind of sucked all those guys up, out of the Big Ten schools there. So, yeah, I started on the operations desk, and then I kind of moved over to the trading desk and was working on trading mostly fixed income futures, longer end of the curves. That's going to be the 5, 10, 30 year. I also traded some of the European fixed income products, the Bund shots in Germany, for example, and then also traded dabbled in the S&P 500s a little bit. I'm sure like everyone does. So I got started there doing market making, two-sided market making. And that was a really exciting time. I think that the fixed income market, particularly in the zero interest rate environment, was an interesting beast. And I kind of got my sea legs in trading with that environment. But then eventually, obviously learned about Bitcoin, and kind of my my career kind of went in that direction of once I get bit by the Bitcoin bug.
Yeah. Before we jump into the crypto, I'd love to dig in a little bit more onto the fixed income side. So were you there trading like through the MF Global sort of scenario that we had for European fixed income? That was kind of an interesting period. And then we had like the Brexit vote in 2011, which was a really interesting period for fixed income. Did you trade both of those events?
I didn't. So I was actually on the equity side at that time. The couple events that I was involved with, where I saw was, I think, the Treasury flash crash in, I think it was 2014. So I was involved in that. I saw it, right? And so that was a pretty crazy liquidity event that we had to really pull out of the markets and kind of understand what was going on. So to kind of be involved in a trading system that when you rely on so much liquidity, you rely on the people being there, and all of a sudden you see a liquidity shock. Was kind of amazing to see. And I think that, I do think about how those type of events happening in the crypto space. But no, it was definitely exciting to see those types of things.
Oh, that's fantastic. Yeah, I'd love to touch on that because I 100% remember that event. So we were just talking about the 2014 bond flash crash. I specifically remember that. I want to just make sure we're talking about the same thing. Was this an overnight flash crash? Someone came in the long end, bought a bunch of futures, and all the spreads went crazy. Is that the same flash crash that you're referring to?
All the spreads went crazy, and then it spooked all the market makers, and so all the liquidity providers pulled. And that was actually more than just overnight. That actually, there was a solid chunk of the trading day where, the 10-year usually had at that time like anywhere from like 2,000 to 3,000 contracts per level, and it was like 200, 300 after that. So I think it was the same event. It was pretty dramatic.
It was very traumatic. I remember being on a trading desk. I was just finishing up being a clerk and going into trading my own book, and I was with my two senior traders who are total badasses. I love these two. They're married now. But I remember, our P&L limit was, maybe like 20 grand, and that our spreads, we had a small size, and the P&L flashed down like 200 grand because the spread, one leg just moved on its own, and all the spreads blew out. And I just remember like one of the traders saying like, what do I do? And the senior guy was like, don't cover, just hold it.
Not cover it.
Do not cover. And it, it's mean reverting. It's a short vol type of trade, and everything came back. But what a crazy time. So that's interesting to hear you guys remember that specifically as well at Allston. When you were market making Treasury futures, were you basically like spreading cash versus futures, or how does that work? Or is it basically like just using a quoter and quoting both sides of the book? Like how does that kind of normally work?
Yeah, so we did a lot of basis trading between the cash and the futures. That was one component of it. Another one was just basically what we call just traditional scalping. So we had some technological and statistical advantages that we would use to place orders in the market, and then that would allow us to kind of get in and get out maybe a tick or two at a time, right? Mm-hmm. And so when the market's so tight and there's that much activity, there's a lot of opportunity for kind of scalping the bid ask spread there. So that was exciting. We did do quite a bit on the reduced tick calendar spreads. And so during the roll time, that was a particularly, I would say, a juicy trading time. Just because, look, a lot of people have the futures on their balance sheet. They need to roll from month to month. And sometimes they aren't price sensitive, and they'll come in and they'll, take a couple thousand contracts in a clip, and then someone else will come and do the other side, and you can kind of just clean up there.
Yeah, interesting. That's a very interesting perspective. So we did something very similar at Chopper. Now, when you went to the equity desk, what kind of strategies did you guys run there? Was that market making as well, or is it more like a directional sort of like prop trade basis, or how were you guys doing that stuff, or how did you do that
Yeah,
stuff?
so that was another market making play there. So we had I think at that time it was EdgeA or EdgeX,
Hmm.
had a liquidity provider agreement where you could actually make rebates for what they would call basically posting in the midpoint. And so what you could do is that in traditional equities, what you would see is you see a bid ask. But if you, for example, bought and tried to hit the offer, you would actually get a slightly improved price on your fill.
Right.
And so that was what we called the midpoint peg trade. So we would get in on the midpoint, and then we would leg out on another equities exchange, and then just earn that rebate, and then earn the spread.
Oh,
So
fantastic.
that's what we did there. So that was fun for a long time. The equity markets are quite a different beast than the traditional futures, so it's kind of a little bit of a transition from one to the other, but it was a lot of fun.
Yeah, yeah, it's very interesting. And equities like have a lot of different venues that things execute on, whereas futures is really like CME, and then the cash leg of the treasury is like two venues. So it's very, very interesting. So how did you discover Bitcoin, and like what really brought you into the crypto space outside of the traditional finance?
Well, I think, Greg, this should be unsurprising to you. I think when you work at a trading firm, people they're looking to trade anything and everything, right? So, I would hang around the desk after hours, and I would find a lot of people were starting to trade Bitcoin just kind of in their personal accounts. And they kind of, and I saw the 2013 to 2014 kind of big ramp up from, I
Mm,
think it was like maybe $100 or something like that, all the way up to 800. And, being a traditional market maker, I'm like, oh, hey, this is crazy. What's going on here? So, obviously, in the classic crypto way, you start trading it before you learn about it. so I started trading a little bit, in my personal account, and then, started to really learn about what Bitcoin was and what made it different. And it was around that journey in 2015-ish, I would say, that I really started to learn about it, take it seriously, and then kind of moved on to make it more something I did in my professional career.
oh, fantastic. And in those early days of trading Bitcoin, was there like certain trades that you like looked at? Was it like technical based, or were you like triangle arbitrage between exchanges, or kind of what stuff caught your eye?
Well, what's funny is that I tried to employ a very similar strategy to what I did professionally. And you quickly realize sort of all the infrastructure and leverage you need to kind of do that type of trading that you typically do in like the fixed income space. So
Hmm.
for example, if you're trying to, scalp a couple cents on like Coinbase or something, right? Like first off, that's super expensive to do because you have to fully fund both sides of the trade.
Mm.
And then if you don't do that, then you can only make a couple cents here and there. And you're just like, okay, what's going on here? How are people doing this? And then that, obviously leads to the next point of like, well, that's why spreads are wide. That's why these markets are still pretty nascent. And that's why you don't see the liquidity that you would do in like a traditional, maybe cash, then futures market, relationship. And so that experience taught me like, hey, this is a great product. I like Bitcoin a lot, but we need to actually take this and bootstrap it into the traditional finance market, which we know and love, because it desperately needs it so people can get better price discovery,
Mm.
people can trade easier, people can trade on margin. And that's where I'm like, hey, we need to go and we need to build a US based derivatives exchange to support this so that I could get people in our markets like me who is market making and improve these prices quite a bit and improve the liquidity.
Yeah, that makes a lot of sense. So maybe can you explain to us like Bitnomial, what is it? Is there a parent company, or is it just an exchange? Like what are all the functions, and how did you find your way into working with those guys?
Yeah, so I'll start with how I got involved in the company first. So it was 2016. I was still trading the fixed income space, but a new asset class like this only comes around once in a generation,
Right.
if not more. I don't know when the last, maybe Eurodollars or something like that in for the CME, that came around. So that was about in 2016, and obviously the founder of the company, Luke Hurston, I worked with at Allston. He was at various desks there as well. And so he started the company back in 2015, and then I kind of jumped shipped back in 2016. And I originally was there to kind of help bootstrap build the market infrastructure. I've built matching engines, gateways, price feeds,
Oh, wow.
surveillance around the markets, all sort of the processes that we need to be compliant with the CFTC. So basically, any part of our system at the exchange, I've had kind of a hand in at this point. Obviously, as time has moved on, we've hired more, and those kind of responsibilities have been passed off a little bit. But that's how I got involved with the company. And then when we launched the exchange is when I took the title of the exchange president, so I can kind of oversee the entire exchange operation and also work on customer acquisition and make sure that we are compliant within regulation. So that's how I got involved with the company. There is a parent company. It's Bitnomial Inc. And Bitnomial Inc. has three major subsidiaries. It has Bitnomial Exchange, which is what I'm the president of, which also has a subsidiary of Bitnomial Clearinghouse, which actually just got approved in December. So we got our final license there that allows us to actually run the clearing portion of our exchange, which is really exciting, and we'll talk more about that in a bit. And then we also have our own brokerage, so our FCM. That allows us to actually face customers directly, but that's firewalled from my side of the business. So those are the two major subsidiaries that we have to try to facilitate the entire derivatives market, from execution clearing and then to the brokerage arm.
Oh, that's fantastic. And so, if someone wants to trade on Bitnomial, would they interact with you guys sort of in an OTC capacity, or is it more like being on interactive brokers with like online GUI type of experience or direct connection? How does that look like from the customer's perspective?
Yeah, from the customer's perspective, there's a couple ways to go about it. We're very traditional in the sense that if you traded on any U.S. futures or options exchange, that's how you would treat us. So we're a centralized exchange, so we don't do anything OTC. You would go through a traditional brokerage. In the futures world, those are called FCMs.
Mm-hmm.
So you would establish an FCM relationship, and then they would clear your trades through our exchange. That, for example, you could get a relationship with one of our brokerages, which is Merrick's Capital Markets, RJ O'Brien, and then StoneX, and also our own FCM called Bitnomial Clearing. So if you establish a relationship with one of those entities, you'll be able to, say, for example, trade on CQG, which is just a front end, like a very industry standard click trading front end, for example. And obviously, all of our sophisticated market makers are using what we call direct market access, which is the low latency binary protocols to our gateways and price feeds and drop copies that allows for them to stream quotes in such a way that you'd be used to, on CME or elsewhere.
Oh, that's fantastic. And what products do you guys currently offer, and what are you guys planning to offer sort of in the future in terms of different coins or futures or options on futures, things like that?
Yeah, definitely. So our kind of bread and butter product right now is the physically settled Bitcoin future. We have a 1 Bitcoin contract and then a 1/10 Bitcoin contract. And then we have the options on the futures for the 1 Bitcoin contract. And so that's kind of our main complex that we have right now. The new products that we just launched a couple months ago is our hash rate futures. So that was the first time in the United States that quite frankly, anywhere in a listed market that we have hash rate futures contracts. So that was, we did that in partnership with Luxor, who I'm sure a lot of your customers are aware of. That allows miners and hedgers and really anyone that wants to kind of long or short hash rate. We have contracts that allow people to do that. So that's really exciting. We're trying to build the full complex or suite of products that allows Bitcoin institutional players, anyone from that have them on the balance sheet, or any miners to come in and hedge all of the risks associated with the business as much as they can. in the most capital efficient way, right? So that's going to be all right. I'm a Bitcoin miner. I have Bitcoin exposure because I mine Bitcoin. It's on my balance sheet. Okay, you can go and sell those along the futures curve. You can manage that risk. Okay, great. Second is all right. Well, I do now that I've hedged my Bitcoin risk. I still have this hash rate or hash price risk, right? Which is the expected value of my mining capacity over a certain amount of time. Okay, so you can actually go and buy and sell that. You can hedge that risk. And then I would say the third most complementary product that we're looking to launch in the near future is electricity futures. That allows the miners that are specifically around ERCOT, because that's where there's a lot of mining density, I would say. I think that should be unsurprising. So we're going to allow them to trade that entire complex, manage that, and then be able to portfolio margin it in such a way that you can get offsets for having the spreads and things like that. And I think that that's kind of the part of the holy grail of what we're trying to offer, and we're still getting there.
Yeah, that's fascinating. So just kind of to recap this. So if I'm a Bitcoin miner, obviously I have some sort of a positive expectancy of the Bitcoin I'm going to mine, but I don't know the price in the future. So I can lock in that future price with you guys by shorting the Bitcoin future and physically delivering once my
Correct.
Bitcoin rewards. Then there's the unknown of the hash rate. So unlike traditional mining, the issuance rate of Bitcoin is predetermined, but the difficulty of getting, earning that reward is based on how many other people are mining. So if the mining sort of space triples overnight, then the difficulty goes up, and therefore the hash rate goes up. And so you're saying, with you guys, I can essentially hedge out that risk of it because now I've like locked in my difficulty via the future. I've locked in my future reward via the Bitcoin price lock, short the Bitcoin future to lock in the price. And then the last component that's outside of my hands as a Bitcoin miner is the cost of electricity. And therefore, I could theoretically hedge that with you guys as well. And now I have essentially, stable, predictable cash flows that are all hedged out, and I can essentially ramp up this business and operate it and hire people and all this stuff. Is that the right thinking?
That's exactly right. And look, I think all of this is very common and typical in the commodity space. So what you described there of just kind of hedging out all your risk and having predictable cash flow is how like the oil farming, like the whole agricultural industry is based on this, because you can't get financing without doing these types of basic things. Could you imagine going to a big bank or a creditor and be like, oh, hey, I'm going to go drill for oil, but I'm not actually going to hedge any of my output, and I'm just going to take wild swings on the commodity itself, and do nothing there, right? They would be like, yeah, we're not giving you any financing, we're not giving you any loans, you're not getting any credit. So this is the type of maturity we want to bring to the space that is much like any other commodity in the world, quite frankly. And I think that that the financing component, I still think, is in a very immature space right now with Bitcoin. A lot of the financing is like, okay, we'll do some asset-backed lending, right? So we'll say, all right, I will, if you give me $100,000 worth of Bitcoin, I'll give you $50,000 worth of cash, right? So you have these very aggressive LTVs. The rates are kind of high, so I think I think they're around 8 to 9%. APR right now, or maybe even higher, particularly after the last couple of days. So the financing space is kind of immature, and we want to be able to have our customers come in, hedge their risk, and be able to get better financing rates for the big growth and expansion plans that they have.
Yeah, that makes a lot of sense. And to your point on the financing rates, I mean, we've seen the Bitcoin basis trade as high as 30% annualized back in April. That is cost of capital to a certain extent.
Yep.
And so for speculators, if you have a physically settled future, theoretically, I can own cash Bitcoin, I can short the future on Bitnomial, and then I can physically settle up at the end. Now, I don't know, do you guys custody Bitcoin, or how does the physical settlement procedure work?
Yeah, so the physical settlement procedure, we don't custody it. It's very similar to like in the commodity space of just like a grain warehouse or something like this, where the grain is held temporarily and then kind of distributed out to the long holder if you're the buyer. So we have a similar mechanism in which the Bitcoin is locked for the short side going into delivery, and then it's released to the long holder at the end of it. What's nice about it is that it's Bitcoin in and Bitcoin out, and so we don't actually do any long-term holding of Bitcoin. There's been a lot of players in the space where they try to make it their business to custody that, and we don't feel like the space is in need of any more custodians,
Right.
and we really want to be able to facilitate people to use the custodian they want, and then just move it to us and then move it out.
Yeah.
So that's how that works.
Fantastic. So I would self custody my Bitcoin. I short the future. On delivery, I send it to the Bitnomial address, who then sends it to the long holder address, and then it's all done.
It's all done. That's right.
Cool. And then theoretically on chain, people could see kind of how many physically settled contracts are going just by looking at those flows, I would imagine.
That's correct.
Cool.
Yep. The settlement's done on chain, which is really nice. I know that there have been some attempts in the past to do kind of book settlement. But there's a finality to on-chain settlement that we really like, and that really ties into the Bitcoin ethos. So yeah, that's what we strive to do, and we will continue to do that.
Yeah, fantastic. Now, there's been a lot of chatter about onshoring Bitcoin mining business, so that's something very exciting. I hope it happens. Obviously, this would be a really nice complement to your business. Your business is essentially allowing sort of the growth of the mining industry. How do do you think that deregulation and sort of more favorable Bitcoin mining winds are coming our way? Like, how do you think about that side of it?
Yeah, well, what's nice about our side, at least on the regulatory side, is that we have all the licenses we need to accomplish our vision in the United States, which is really great. I think that offers a lot of, I would say, confidence to our market participants, because they can come and they can trade here and they know that they're safe from a regulatory perspective. I think that's been a big demand for our product. I think there has been in the past some short-term interest in trading things offshore, but that has that a lot of risks with it. But being able to trade on our platform is much more known in terms of regulatory risk. In terms of mining onshore, yeah, I mean, look, what's exciting about Bitcoin is that it's economically driven to kind of go to the place that it makes the most sense. Mm-hmm. Where's the cheapest energy? Where's the most geopolitical stability? All of those types of things. I think that the United States does make sense. Texas has a lot of cheap energy. I think that, at least from a Bitcoin mining perspective, I don't think there's a whole lot of uncertainty about its regulatory standing, right? It's been well defined as a commodity. And so I think a lot of players in the space are feeling very comfortable here. I'm excited to see that expand.
Yeah, I totally agree. And, if we think about like the US dollar reserve system, obviously like oil being priced in US dollars is very favorable to us. We have big oil production in the United States. A few years ago, we were the number one producer of oil. Why would Bitcoin be any different? If we have an alternative sort of money, decentralized money, it should be us that have, the markets that support that, both like the financial trading markets, but also the mining markets, because we could always think of a scenario where, let's just say, China or some geopolitical, adversary owns 51% of the mining power. Then we're subject to 51% of tax and chain reorgs and everything that undermines the value of hard money that Bitcoin proposes. So it seems strategic and for us to be able to do that. And so having a business like yours that helps us hedge out all those risks makes a lot of sense to me.
Yeah, definitely.
Do you look at any sort of like trading, like the vol markets in crypto or anything like that? Is there anything that you still keep an eye on from either a PA perspective or from a company perspective in terms of opportunities on the prices?
Yeah. I mean, I definitely think that a large part of what we do to kind of ensure market integrity is kind of understanding what's going on, what's happening out there. Even with other exchanges that we don't touch, right? And so we always want to say, hey, like, what's going on at Binance, what's going on at Deribit, and really why we do that is more of a sales pitch to us, because I think that there is a lot of concern sort of when volatility spikes with offshore markets. I think there's, always a question of, hey, what's my counterparty risk? What's my platform risk? Are these other offshore exchanges say they have these quote unquote default funds, but are they actually going to be used in the case of, massive failure on a counterparty? I don't know. Sometimes it hasn't been proven yet, so we don't really know. So it's hard to say. But yeah, I mean, obviously we're an exchange, so we like volatility. The more volatility spikes, typically there's more, delta hedging in the options that happens. More people want to, manage their risk. Or, I think in the past couple of days, we've had miners that were more interested in taking some action. When you see a big 20% move in a day, right?
Mm-hmm.
They have inventory to manage. So we do take a look at that, and we like to see it. But also too, I think that as you get more volatility, it kind of pushes people to us because they just have more risk to manage. And I think that the industry, it's too tight right now, particularly with the hash price down and maybe sub 50s. I think it's like trading maybe $45 right now. That they got to be pretty tight with their risk management because there's not much left between that and potentially going bankrupt.
Yeah, yeah. So typically, I like to, wrap up the interviews with a couple of personal questions. So, what do you like to do, outside of work when you're not working at Bitnomial?
Yeah. Well, I have to say, I have two kids, and so my free time is a lot eaten up by them. But yeah, outside of that, I think exercise is something that I really like to do. Get up early in the morning and get out and kind of crank something out.
Mm,
That kind of clears your head for the day. So that's been something that I've been really taking serious recently. Reading up on the space, I think, is really critical, and yeah, I mean, just kind of learning about and obviously crypto Twitter. I mean, I have to say that's probably one of my favorite hobbies right now. Unfortunately.
yeah, yeah. It's a lot of good stuff, and like it's such like an immediate source of information. It's very interesting. Um, and what about along your trading career? Was there any like books that stood out to you a lot? Do you have any favorite trading books?
Unless you want to talk about like, the Sheldon Natenberg,
Sure, technical book,
books
yeah.
of, option volatility and pricing and things like that. I have read quite a few trading books. But to be honest with you, I haven't felt any of them to be too illustrating. I think a lot of it comes from experience and just understanding what risk management is. I don't have any recommendations on that. I think I kind of went to the school of hard knocks at a trading firm, and I think that's what taught me the most. But look, if you're looking to, I can say this, and this is like one of those classic things. You can get from a trader is that hey, be very careful of day trading. I have worked at firms that take it, that will make money off of day traders,
Mm,
right? Oh, if you're looking to trade it, think of it more as an investment. Obviously, I think of Bitcoin as one of the best investments of our generation. So just be very careful of day trading. I'll say that.
yeah, that's very interesting. I always thought about the same thing too. Like the shorter time frame, the more infrastructure edge is important. The longer time frame, the more it's like anyone's guess, and it's kind of an even playing field, which is more of the investment horizon. Very interesting. Okay, last question here. If anyone wants a career like yours, what piece of advice would you give them?
Yeah, well, I would say get ready to take some risks, right?
Mm,
So, I think adopting something early is really important, right? So, and then having any technical skill to kind of get involved. So, for example, if you're not a software developer, obviously, if you're a software developer, you can just go in and join an exchange. A lot of exchanges or people in the crypto space brokerages are hiring that. And if you're maybe on the finance or accounting or sales side, there's always jobs in the crypto space, but just be willing to kind of take that plunge. It is kind of a scary and risky endeavor, but there is no more exciting industry in my mind. So just get ready to take that career risk, but it'll be definitely worth it.
fantastic. Well, Michael, thank you so much for coming on. Very interesting. It's very interesting to see like the potential future of the crypto mining industry in this country. So very exciting to see everything that goes well your way. So thanks for coming on the podcast.
Hey, thanks, Fred, for having me.
Absolutely.